First Bitcoin.
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 Bitcoin. Bitcoin.
Bitcoin.
First Bitcoin ETF.
BlackRock filed for a spot Bitcoin ETF.
Could get approved and soon.
Last week, Wisdom Tree also filed for a spot Bitcoin ETF.
This was a huge win in the industry's efforts to get a spot Bitcoin ETF launched. Now the SEC is going to consider what to do.
But we know the SEC under Gary Gensler is hostile to the concept of a spot Bitcoin ETF. He's rejected every spot Bitcoin application.
The SEC just delayed a decision on a round of bunch of spot Bitcoin ETF applications as expected.
So what is next?
There's one major decision that stands as a gateway to the crypto frontier. It's the decision that could unlock billions, if not trillions of dollars in investment into the world of Bitcoin. This decision is none other than the approval of Bitcoin ETF, a true game changer for cryptocurrency. Bitcoin ETF offer a bridge between the cryptocurrency and traditional financial markets. So, what's stopping this big change from happening? And why can't this giant investor directly hold Bitcoin instead of applying for Bitcoin ETF? Well, to understand the importance of Bitcoin ETF, let's explore what Bitcoin ETF are and why companies are entering into the race of ETF. Let's first understand the backbone of this financial innovation. ETFs or exchange-traded funds. It's a financial tool designed to make investing more accessible and manageable. In the traditional stock market, when you buy a stock, you're essentially investing in one specific company like Microsoft, Apple, or Google. Each stock represents a slice of ownership in that single company, a straightforward bet on its performance. If the price of a particular share falls, your investment in that company falls. And this is where ETFs come into play. Imagine an ETF as a basket filled with a variety of assets, stocks, bonds, commodities, or even cryptocurrencies like Bitcoin. When you invest in an ETF, you're essentially buying shares of that basket. These shares are traded on stock exchanges, just like individual stocks. This means you can buy or sell them easily, without the hassle of managing multiple stocks individually, making ETFs incredibly flexible. Here's where it gets intriguing. Well, they come with plenty of benefits. The key advantages of ETFs are diversification, easy trading, transparency, low costs, and fewer taxes, making ETFs a standard in traditional investing. Now that we've seen why ETFs are a big deal in regular finance, let's dive into the world of Bitcoin ETFs. But what exactly are Bitcoin ETFs? In simple terms, a Bitcoin ETF is an investment fund that allows investors to gain exposure to the price movements of Bitcoin without directly holding the cryptocurrency by themselves. They work like a bridge linking traditional finance with the exciting world of cryptocurrencies, especially Bitcoin. Now let's break down how this works. When you invest in a Bitcoin ETF, you're essentially purchasing shares of the fund. These shares are listed and traded on traditional stock exchanges, making them as accessible as buying regular stocks. Behind the scenes, the fund holds Bitcoin as its primary asset. Each share you own represents a portion of that Bitcoin. You can follow Bitcoin's price without needing a digital wallet or tech know-how. And it's not just about convenience. Bitcoin ETFs introduce a level of regulation and oversight that's often missing from the direct purchase of cryptocurrencies. Meanwhile, the demand for Bitcoin ETFs in the investment world has been remarkable. Investors have been eagerly awaiting the arrival of these instruments for several reasons. Firstly, they're easy to use. Secondly, it's all about legitimacy. Institutional investors, who were once cautious about crypto, are showing more interest because Bitcoin ETFs stick to regulatory standards. Third, diversification is a key driver. For portfolio managers, Bitcoin ETFs offer a new asset class to balance risk and reward. Plus, when a Bitcoin ETF gets approved, it can bring a lot of money into Bitcoin. So, what's stopping it? You see, the path to launch a Bitcoin ETF isn't that straightforward. It involves dealing with various regulators, mainly the SEC, which has concerns about market manipulation, fraud, and protecting investors. Meanwhile, to meet regulatory standards, companies need to come up with plans to address these concerns. Until then, getting approval isn't going to be that easy. To truly understand the journey and challenges of Bitcoin ETFs, let's delve into some case studies. VanEck was one of the first to propose a Bitcoin ETF in December 2020. After a thorough review on 11 December 2021, the SEC rejected a proposal citing small market size and price volatility issues. At that time, Bitcoin hit an all-time high of $69,008, thanks to companies like Tesla who began to accept Bitcoin for their car purchase. With growing popularity and trust in Bitcoin, many began to see Bitcoin as a digital gold against inflation. Later on June 15, BlackRock, the world's largest asset manager, with $9.3 trillion in assets under management, filed for SEC approval for a so-called spot Bitcoin ETF. BlackRock's filing has encouraged several other financial firms to believe a spot Bitcoin ETF is very likely to be approved. The reason is that BlackRock has submitted 576 ETF applications, and all but one and only one application hasn't been approved, making BlackRock's approval rate 99.8%. Later, institutions like Fidelity, Bitwise, Grayscale, ARK Investment, and WisdomTree began filing their application for approval of their Bitcoin ETFs. However, the SEC has 240 days for the approval or denial of their application with their respective filing dates. Meanwhile, the first deadline for spot Bitcoin ETFs was on September 2, 2023, and the SEC delayed all of them until October 17, 2023, which is the second deadline. Despite delays, analysts believe that the SEC may eventually approve Bitcoin ETFs, especially due to recent court losses against Grayscale Investment and partial loss in the Ripple case. But the story doesn't end here. Despite these setbacks, institutions like BlackRock, Grayscale, and Fidelity aren't giving up. They've engaged in dialogues with regulators, revised their proposals, and sought to address the SEC's concerns. Bitcoin ETFs represent a significant step in the evolution of cryptocurrencies and their integration into traditional finance. While the road to approval may be challenging, the potential benefits for both investors and the cryptocurrency industry are substantial. All eyes are now on the upcoming October 17th deadline set by the SEC, with hopes for its approval. As a viewer, what are your thoughts? Do you believe the SEC will approve the Bitcoin ETF, or will they come up with a new excuse? Do share your thoughts in the comments section, and don't forget to like the video and subscribe to the Coinpedia channel.